Under Armour CEO and founder Kevin Plank is making a bold move to stay in control of his company. Late yesterday, he announced the company would create a third class of stock without any voting rights. It is all to prevent a potential trigger that would end its current dual-class structure if Plank's stake falls below 15%. So let's bring in Camilo Lyon. He covers the company as a managing director of equity research at Canaccord. Camilo, what do you make of this?
Well, I think, like you said, I think this is a form of maintaining control and ownership of the company that he founded. Kevin Plank is undoubtedly the heart and soul of Under Armour. He's done extremely well for shareholders over the years by focusing on long-term goals and the direction of the brand, and there's no one else that I can think of that would be better suited for taking Under Armour to the next stage. So this structure ensures that he firmly remains in place.
Is this a move that we think generally we should see corporate CEOs and boards doing or approving, or is it unique to Under Armour given their history and their success?
Well, I think it's unique to founder-led companies. You know, Google is mentioned as another example of a company that enacted such a structure not too long ago. So I think this is more unique to those companies that are started by the founders who are, continue to drive the direction and the strategy of the brand.
Camilo, as you mentioned, there is some precedent for this, but it wasn't that long ago that the prevailing wisdom on Wall Street and on Main Street was that governance was a good thing and that the CEO of a company should be hired and, in theory, retained by the board so long as he was doing a good job. Kevin Plank has been doing an amazing job. Why does he need to maintain control of the company? There's absolutely no reason to assume that an independent board would have anything other than great things to say and do for Kevin Plank.
I'd agree with that, but I think that there's also examples in the not-too-distant past of founders that have left the company and in seemingly on good footing, and the company has fallen by the wayside. And the company that comes to mind, in my opinion, is Starbucks. So I think that if he's able to create a structure where he can continue to drive the strategy of the business, continue to use the currency, which is, I think, an important topic here, continue to use the Under Armour currency for future growth potential without diluting his interest and allowing him to focus on the true growth of the business long term, I think that's a win-win for shareholders.
Well, I raised this point with Stephanie earlier. Kevin Plank wouldn't be confronting this problem if he weren't selling so much stock. And he addresses this point in his letter to shareholders. He says dilution from regular employee equity-based compensation, fair, and other possible dilution, also fair, such as stock-based acquisitions or equity financings, as well as any sales of stock by me. Now, I went back this morning through the SEC filings, the Form 4s that Kevin Plank filed, and since the beginning of 2014, he has sold $240 million of stock. Now, I know he doesn't make a whole lot of money, but there is no obligation for Kevin Plank to sell $240 million of stock.
Okay, but hold on. When you say the number $240 million, you have to put into context what he does pay himself. $26,000, and I think he gets $1 million or $2 million.
You got $3.6 million in total compensation last year.
Meyer gets paid $57 million.
No, that's fine. But, Camilo, the point is, Kevin Plank may be undercompensated relative to other CEOs in his industry, CEOs who have performed as well as he has, who have overseen the kind of stock price appreciation that he has delivered, but they don't get paid $120 million a year. Not necessarily, anyway, for a company of Under Armour's size.
Eric, you also have to put that into the context of his net worth of the company, of his overall stake, and that's about $3 billion worth. So in the context of his ownership, I think he's entitled to diversify some of his holdings. He's got some estate planning that I think he's entitled to do, given the performance.
You know that people have two different views about that. Why would somebody who believes, I'm not debating the point about diversification, but there are folks who believe that you should put your money where your mouth is, right? If you believe in your company, you should have all of your equity invested in that company. I'm not saying that that's necessarily a smart strategy, but there's a difference of opinion.
Listen, once you've got to build a life for yourself. If you're Kevin Plank, you want to live.
That's quite a life that you're building for yourself at $240 million of stock sales in 18 months.
Okay, and put into perspective the company that he's built and what the stock has done compared to his peers. He kind of earned the right to live large.
There is, in nobody's book, is this called good corporate governance. That's my point.
Does it have to be across all books, good corporate governance? The guy built an extraordinary company. It's hard to find a shareholder that doesn't love what he's done.
The stock performance has been out of control, but the shareholder needs to know and ultimately make the decision for himself.
Okay, here's the question.
If this is a ride he wants to be on.
Okay, then Camilo, hold on. Then we saw Google, when this happened with Google, Google got sued. So many of the shareholders pushed back. Do you believe there is going to be big pushback from shareholders?
I don't think so. I don't think you can argue with the performance he's delivered. If there's any sort of doubt in his...
Hang on a second. Would you argue with Larry Page and Sergey Brin? They delivered amazing performance and they were sued.
Your question is commitment to the business. And I think that's wholeheartedly inappropriate. I think he's the heart and soul of the company, undoubtedly. And I think that if we dig behind, underneath the covers, his intensity for the brand and for the company that he's built has arguably rubbed some of his subordinates not that well. And I think that's what's been, that historically has caused some strife between him and some of his lieutenants. I think that he is the one who's been driving a lot of this growth, and he's, like I said before, and I'll repeat it again, he is the sole energy behind this business that is taking the brand to global heights.
Do you think? Sorry, continue.
For him I just feel that he's earned the right to realize some of those gains. Shareholders certainly have.
All right. I want to ask one more question, and we don't have time, so...
We will have to continue the conversation. Who knows what's going to happen? It's possible that Under Armour gets sued like Google was sued. Camilo, terrific to have you on the show. Camilo Lyon of Canaccord Genuity. He covers Under Armour.